So unless you've been living under a rock, you would know that the Rona pandemic has devastated the US and the worldwide economy and has decimated finances for a lot of people. So in times of crisis and bad market conditions, usually a safety net is dividend payments. Dividends are portions of a company's profit that are spread out and paid out to shareholders for being a loyal, stalwart shareholder of the company. I've covered this before a few times on my channel. I'll link some videos down below I did a long time ago covering dividends. Dividends are great because even if your stock is not appreciating and is sliding, you could still make money and collect those dividends every quarter or however often the company pays out those dividends. And a good way to keep those dividends going and rolling in is to smash the like button. Be sure to give the video a big thumbs up. It will just help with the YouTube algorithm. That way it will support me and help me greatly. I do appreciate it. Do click that like button. Thank you very much. However, because of this pandemic, it's been evident that companies are struggling to keep up and pay out this profit to shareholders. So in the second quarter of 2020, companies have been forced to slash its money that's paid out to shareholders. They have been unable to keep up and return this money to their shareholders. The net change in quarter two payouts, or the difference between increases and decreases for all domestic common stocks, registered a decline of $42.5 billion from a year earlier. This is according to Howard Silverblatt, a senior index analyst at S&P Dow Jones Indices. This was the biggest drop since the $43.8 billion decrease in the first quarter of 2009 as the economy was escaping the Great Recession, and follows a $5.5 billion decline in the first quarter of this year. According to Silverblatt, he said that there were massive dividend suspensions in quarter two of 2020 as companies had no time to ride out the virus, as sales were cut off and positive cash flow turned to burn rate analysis. So for the S&P 500 large cap companies, dividends totaled $119 billion for the quarter, but this is compared to the record $127 billion issued in the first quarter. However, the quarter two total was a slight increase from the $118.7 billion a year earlier. Dividend increases in the quarter totaled just $6.7 billion. This is a 45.7% drop from a year ago, while decreases came to $49.2 billion, a 1,156% increase. The US entered a recession back in February, following its largest expansion in history. Just a month earlier, corporate America came to a standstill as lockdowns were enforced and people were not able to return back to work or have money to consume and spend. Second quarter earnings for the S&P 500 are expected to fall about 44% from the same period a year ago. This is the steepest plunge since quarter four of 2008, according to FactSet. That decline is projected to abate somewhat in the third quarter to a loss of 25.2%, but the index is not expected to show aggregate profitability until quarter one of 2021. Now, Silverblatt believes that there are no signs that the worst is in for the dividend pullbacks. The damage is likely to continue into the third quarter. He said dividend suspensions rather than outright decreases will be more prevalent. I did a video a few weeks ago covering my thoughts and opinions, as well as what economists and analysts are saying about whether or not the US market has reached a bottom yet. I did that video. I'll link it down below in the description. I'm curious if you think we have reached the bottom yet. Do you think the stock market, the damage is nowhere near over, or do you think we have more to go? Tell me down below in your comments your thoughts. Now, much of this will depend on the path of the virus and whether or not the economy can reopen successfully. We've seen a massive resurgence in cases in almost every state now, and we've seen the largest numbers on record ever since this pandemic began. States have been forced to roll back their openings or shut down completely once again, and businesses have had to close their doors forever. Silverblatt continued with the cuts appear to have subsided as those most impacted have taken their actions, and those currently able to ride through the initial downturn are continuing to pay. Quote, if the overall reopening improves and regions act to limit any upturns, we would expect to see fewer and smaller dividend increases in the second half, and a significant decrease in cuts and suspension, which could limit the overall 2020 damage to a low single-digit decline. Should the virus continue to flare up, that could mean a return to significant cuts. So what's the solution here? How do you mitigate this? You're supposed to be dependent on dividends as a good safety net for you, even in times of calamity. If your stock is tumbling and you're not receiving dividends, until you click that sell button, you still haven't locked in that loss. But what's the point of holding that stock if they're not going to be paying those dividends? Now, if you are currently holding any stocks, I wouldn't panic too quickly. I would not sell anything that you own. This too shall pass. But you want to make sure that your portfolio at least does include some higher cap stocks, some of the blue chip stocks that have been continuing to pay dividends even through these conditions. Companies like Apple, Microsoft, the big tech companies have thrived during these times. They've actually reached all-time highs, and they are continuing to pay out those dividends. If you do have a portfolio of mostly small cap stocks, make sure that you diversify it with mid to large cap stocks. These are the stocks that have weathered this storm and are continuing to pay out quarter after quarter with no issues. And if you're risk averse and don't want to toy around with companies and trying to pick and choose about which ones are paying dividends and which ones are not, or trying to predict which ones will continue to pay dividends, then you can just throw your money at something like an S&P 500 index fund that you know for sure will increase over time in appreciation, as well as will also continue to pay out those dividends. Or perhaps you'll feel more safe with a REIT or REIT. A lot of these REITs have companies that have locked in 10-year leases that they must pay them. Therefore, the REITs will continue to collect that rent and then be able to distribute it and delegate it to their shareholders with no problems. There's ways to circumvent this. You don't want to just be holding garbage, cheap penny stocks. You want to invest in strong, stable companies that will be here for years to come and can survive crises like this. I wonder, out of my subscribers, those of you who are shareholders of companies, have you missed out on any dividend payments, or are you seeing them continue to come in? Let me know down below in your comments, what have you been seeing and what results you've been seeing with dividends in recent days. But I hope you enjoyed this video. If you did, be sure that you do click that like button, smash it for me. And if you'd like to see more videos from my channel, I do post videos every single week covering business, finance, investing, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. Click that big red button. I greatly appreciate it. And if you'd like to be notified every single time I make a new video, so you're first line to see it before anyone else, click that little notification bell as well, so you're notified every single time I make a new video. Looking forward to seeing you in the next one.